The global economy has long moved to Washington's rhythm, but imagine a new power, China, steps onto the dance floor, refuses to follow, and wins a brutal trade war. What if Beijing not only withstood the US onslaught, but emerged victorious, completely reshaping the foundations of our 21st century world? And let's find the answer to the question, what if? The Trump administration initiated a trade war, imposing significant tariffs on Chinese goods to rebalance trade. This strategy spectacularly backfired. Rather than succumbing, China demonstrated remarkable resilience, swiftly consolidating internal consumer demand, aggressively securing alternative global supply routes, and implementing robust incentives for domestic industries, effectively insulating its economy. Consequently, American consumers bore the burden of higher import costs. Crucially, US industries, especially agriculture and vital tech components reliant on Chinese markets or global supply chains, suffered disproportionately from diminished access and soaring input expenses. China shrewdly capitalized, positioning itself as a reliable, stable trading partner for diverse nations, consistently offering economic cooperation. In stark contrast, the United States was increasingly perceived globally as unpredictable and protectionist, eroding its international trade reputation and influence. Having successfully weathered the trade storm, China doubled down on domestic innovation, significantly bolstering its Belt and Road Initiative and actively accelerating the development of its internal consumer market. This created a remarkably resilient and self-reliant economic engine, less vulnerable to external pressures. Global multinational corporations, prioritizing stability and efficiency, increasingly diversified production away from traditional US-centric supply chains. They opted for Chinese or China-aligned alternatives, which promised fewer disruptions and greater predictability in their global operations. Crucially, the digital yuan gained significant traction as a viable alternative for international transactions within specific trade corridors and with China's economic partners. This subtly but profoundly challenged the US dollar's long-standing hegemony in those regions, reshaping global financial architecture. The reverberations of the failed trade war hit American shores hard, starting with its foundational industries, key American manufacturing sectors, agricultural export markets that once thrived on global demand, and leading technology firms found themselves under relentless pressure. They grappled with lost international market share, significantly increased operational costs, and a noticeably diminished global competitiveness, struggling to keep pace in a changed world. Domestically, the political landscape in the US underwent a dramatic upheaval. The trade war was widely condemned as a profound miscalculation, triggering a nationwide reevaluation of protectionist policies and profoundly shaping future election cycles. Public trust in establishment economic strategies eroded significantly. This led to a pervasive sense of economic vulnerability and strategic overreach permeating American society. Intense internal debates erupted, questioning the future of globalization, the very role of international trade, and America's now diminished standing on the world stage. Freed from stringent trade restrictions and buoyed by unwavering state-backed investment, China rapidly accelerated its advancements in critical emerging technologies. This translated into significant leaps in artificial intelligence, 5G infrastructure, and quantum computing, solidifying its position at the forefront of innovation. Consequently, nations previously hesitant about Chinese technology solutions became more open, viewing China as a leading, stable, and essential source of cutting-edge innovation and digital infrastructure. Meanwhile, the US struggled to maintain its competitive edge in key technological sectors, finding its innovation ecosystem somewhat isolated, its research efforts comparatively underfunded, and its technological standards increasingly marginalized on the global stage. The world witnesses a substantial erosion of US economic and political leverage as its maximum pressure strategy against China decisively failed to achieve its objectives. This public demonstration of strategic miscalculation fundamentally undermines global confidence in American leadership and its ability to dictate terms. Observing this pivotal shift, traditional allies and previously neutral nations increasingly hedge their bets. They actively seek closer, more integrated economic and diplomatic ties with a triumphant China, openly questioning the reliability and long-term strategic foresight of US commitments and alliances. Crucially, international institutions, particularly those governing global trade and finance like the WTO, face unprecedented pressures. China's now validated validated model for state-led capitalism offers a compelling and successful alternative, directly challenging the foundational principles of the liberal economic order and prompting a global reevaluation of governance structures and norms. China's trade war victory shifts global power, boosting its tech and diminishing US influence. In your opinion, what if China beats Trump in the trade war? Share your thoughts in the comments.